Hi, this is an introduction to QuickBooks 2016. My name is Art Lander, and my email is cpa@arthurlander.com. Let's go ahead and get started by taking a look at the home page. This is the central point where you can always go back to. If you look at the home base, you have two sections. This section here is more of a cash-based taxpayer, and this is a good place to start out when you're first beginning. So you've got the options to write checks, to record deposits. The section over here is more for an accrual-based taxpayer. An accrual-based taxpayer, they recognize an expense when it's incurred rather than when it's paid based on a cash basis taxpayer. Over here, on the accrual side, you recognize income when you send out the invoice, when you create the invoice, as opposed to a cash basis taxpayer who recognizes the income when they actually get the deposit. So that's a nice starting point to take a look at. The next point where you'd like to start is to start looking at your preferences. And there you can make some changes under Preferences under the Edit section. And here you have the opportunity to, first of all, take a look at your desktop view. We were just looking at that, weren't we? And if you'll notice here, I've got the desktop view shows employees. Well, it could be very possible that you're not going to be processing payroll through QuickBooks. Could be that you're with ADP or Paychex, and you'll be entering in that payroll activity through a journal entry, and we'll talk about that shortly. In that case, you're saying, you know, I really don't need this on my desktop. It just is confusing, and maybe it's causing an issue. So you can change the view on this so that you don't have to see that anymore. So you'll go to Company Preferences, and you'll see which things are on and off. And here's payroll. It's right now, it is showing as being on. So if I click that, I say, you know, I don't really need this anymore, and I go, okay, no payroll, then basically it will take it off. Now it's going to close this just for a second, okay, and I'm going to come back to home base, but you can see now that the payroll section is gone. So the nice thing about home base is I have options about what's going to be appearing on my home base. If we go back to the Edit for section and take a look again at Preferences, the other thing I'd like to point out to you is that we have something called Reports and Graphs, and that's an important thing also. Why is that? Again, we'll take a look at Company Preferences. The reason why that's important is because later on, when you do your reports, you may only want your reports on a cash basis or only on an accrual basis. So right now, if I were to do a report, and I'll just do a quick report for you later in a little bit, you'll see that it's on. I'll cancel it. We'll do a report right now. You'll see that the report is on a accrual basis. See, it says accrual there. Well, if I'm on a cash basis, I don't want to always have to go into the custom report section and be changing it to a cash basis. It's just frustrating. So, and what we're trying to really do is avoid as much frustration as possible. So I can go to my Edit, my Preference sections, go to Reports, the company, and from now on, all my cash reports or all my reports will be on a cash basis. So that's a good thing. The next area I'd like to point out to you about areas that you'll be working with is the chart of accounts. And here is a list of all the accounts that are going on. And basically, I have the opportunity to edit the accounts to change their names. So, for example, here's Design Services, and let's say I want to edit that. So I want to call it Planning Services instead of Design. So I can just change it to Plan, or maybe I'll call it Plan and Design Services. It gives a better explanation of what we're doing. While we're here, I want to show to you a couple things. First of all, we get to choose what kind of an account, what kind of category it's in, all right? And in our case, it's properly categorized as income, but maybe I made a mistake and maybe it should be under other expenses, okay? So basically, we've got that correct, and it's under the sub-account of landscaping services, which is under income. And because it's a sub-account, I couldn't change it. You'll notice the computer said, hey, it's already been recorded correctly as income. One thing, though, we can do is take a look at the mapping. And here, this is important because in the end, you want your QuickBooks to be able to map over to your tax software. This is such a convenience so that it automatically transfers all the data right over to your individual or corporate tax return. So when you come through here, when you're adding charts of accounts, and let's say we'll just add a new account. I think that that would be a good exercise. So we're going to add a new account, and I'm going to save this data for right now. Now you'll notice I have a lot of options. This could be a banking account, but I've decided I'm going to have an expense account. I want to set up an expense account. We'll call it training. How's that for a good expense account? Now you'll notice that the tax mapping is unassigned. So this is my opportunity to tell the software, when you shift all this data over to the tax preparation software, where should this information be included? And I don't have anything here as far as training expense per se, but I do have another category called other costs, and that is going to be, and you can see it's under Schedule C. I'm going to call this other business expenses. So that's how that'll get assigned over on your Schedule C for your 1040. So now I can close that, okay? And it'll save it, and there it is, training expense. And so basically that also now, once we start entering data, start to be on your report. Now this is also a very important area because maybe you'll never have bond expense. And you say, why do I need this? It's just cluttering up my chart of accounts, and it's frustrating to find the other accounts. Do I want to delete it? Yes. And I can delete that, so that's gone. And so this gives you a chance to go ahead and organize your chart of accounts to make it easier for you to add accounts, subtract accounts, and also do the mapping. Now, if we go to another area that I wanted to show you, and you'll notice when we looked at this, it was a Schedule C, a sole proprietor. Well, we need to change that, and we can change this because maybe I'm an S Corp or a C Corp or a partnership. So I need to tell the software what kind of an entity I am so that it can give me the correct accounts, and actually also when it goes to shift the numbers over to the tax return, they'll get assigned to the right tax numbers, the right tax account. So here I go to my company, and here is Larry's Landscaping, and I'm going to go ahead and edit this account because it needs to be updated for a couple things. One, here's the contact information. That's great. The legal information. Maybe I'm Larry Landscaping, Inc., and that can be very important to let people know. The company information, the federal ID number, you may want to put that on your invoices so that when a customer gets that and they want to give you a 1099 at the end of the year, they're not calling you asking you for your federal ID number. Then we've got reporting information. Now you'll notice, look at the fiscal year here. The fiscal year is October. The tax year is January. This is the first month. Well, my fiscal year is probably going to be pretty similar to my tax year. I'd venture to say it's going to be identical. But I could have different a fiscal year from a tax year. But you'll notice the next line down is the income tax form used. And here it's the sole proprietor. But that's not us, is it? We are rather let's say we're an S corporation. So now I'll check that, and you'll notice it's saying, hey, we're about ready to change your settings. Is that okay? And you go, yes, that's fine. So it'll give you the settings that you need when you shift over to the corporate return so that you'll have a smooth transition. So that's important, and that's an important thing to get set up as your company information. So we're going to click OK to that. And now we're all set up there as far as adding new accounts, changing over some of our preferences, and also updating our company information. The home base, we've looked at the desktop and the views, and now I'd like to take a look at the reports. And the reason why I want to take a look at the reports is basically when I first got into public accounting 37 years ago, you would take your bank statements and your vouchers that were all handwritten, and you would send them out to your CPA for a profit and loss and a balance sheet, and you might get that back in a month's time. But now with this type of software, it can be 3 o'clock in the morning, and you can get a profit and loss statement. And that's the beauty of this software, is it gives you the ability to manage your business in a way that's helpful to you. Let's take a look at some of the things and why it's so helpful. You'll notice that the period here is just really for 2 weeks, the last month to date. Well, I really would like to see this fiscal year. Again, we've changed that, and you'll notice it's now January to December. Remember, before it was an October fiscal year, but I made it the same as the tax year. And you'll also notice that my report now is on a cash basis. So here we are, and this is just an example, Larry's Landscaping Company. And oh, by the way, QuickBooks adds these type of example companies onto the software that you purchase to give you an opportunity to learn and practice with the various items that we're talking about today. So basically, the nice thing about this is we have an opportunity to customize the report. And why is this important? Well, first of all, we can take a look at a comparison to a previous year. We can look at the change in amounts and the change in the percentages. So let's do that and see what the comparison looks like. Isn't this fantastic? I mean, this is a very basic example, the Larry's Landscaping, of a profit and loss, but it gives you an idea of where the changes are. Now, sometimes changes can be important for dollar amount, but also as a percentages. And you can see, for example, here we've had a big increase in service income. So we're doing something right there, and this is the percentage. So this type of a report gives you a wonderful opportunity to say why, what's going on here, what happened in the last fiscal year, and this is an example that's out in the future, 2020. What happened that led us to the situation? And here you can click right on the number and it will tell you what's in there. So maybe there's some misclassification, you can change it so that your books are accurate, or maybe it is really the situation that we've done a lot more work tree removal. And this is the beauty of QuickBooks. It allows you to drill down. As a matter of fact, you could drill down further and even look at the invoice and say, oh, what happened with this $1,935? You can see exactly what happened in that invoice. So it takes you all the way down and all the way back up, and you can see the reports. This is the benefit of this type of a report, and it's very helpful. We're not going to save this report for right now, but I wanted to show it to you. There's one other item I wanted to show you about the profit and loss that I think will be helpful to you. We're going to go here to the customize the report, and basically I just wanted to show you that you can add filters and headings and that type of information that you'll need. So this is an important report for you, and you can also have it so it will break down by different categories. You can have it, say you had 3 locations, location A, B, and C. You can actually have this income and profit and loss statement broken out by location A, B, and C. So you can see which location is doing best for you. In order to do that, you've got to customize, you've got to do it by a comparison, and then it will show up and give you that kind of information that's going to be helpful for you. The balance sheet is the same situation. We like the balance sheet report, and here's an example of it. And by the way, you can also get a detail of this, and this is very helpful. The thing I'd like to point out to you is that when we don't want to try to do too much, and you'll notice here we have accounts receivable. And remember, when we looked at the home base, that was on the accrual basis. One of the issues is with the home base, and let's go back to the home base for a second, is people will send out an invoice. And when the money comes in, when the check comes in, they'll go over here to the cash basis and record the receipt of that check. Well, it doesn't work that way because it should have been recorded here over on the accrual system. And what will happen is if you get a check that was originally billed out as a receivable under an accrual method, and you go over here to record the deposit and shortstop this, it will cause an error, and it will cause your receivables to come out of balance. And that's a very typical problem, and it's also the same type of thing that you'll see up in the payables. And sometimes what you'll see is actually a negative receivable, and you go, how does that happen? Why is it that I have a negative accounts receivable? And the reason is because basically when the cash was received, it was posted through an incorrect method. So we want to be careful about that, and we want to look at our reports. So one of the things, and you should do this monthly, you should look at your customer and receivable reports and look at the customer balance details and go down the list and see, does this look accurate? Does it look correct? Is there something that just looks really strange? Are there old receivables there that need to be cleaned up? And so this will give you a detailed list of all the invoices and all the payments, and are they matching up? Is there something that's out of balance? This might be a good example right here. It looks like there was just a partial payment made of $200. Is that correct? You may need to walk down the hall and talk to someone. Well, was that $200 for this account, or was it maybe for some other company? And maybe it was for this company down here, the Galladay Sporting Goods. So it's very important once a month to review your receivable report in detail and your accounts payable report in detail. Well, let's go ahead and go back to the home base, and we'll close some of these windows, and let's go ahead and write a check. Okay, and we can do that. First of all, we're going to pick our checking account. In this case, we've got 4 accounts that we could write a check off of, but we're going to pick this one, and we'll just pick a vendor. Let's pick the California Gas and Electric Company. And so basically, it's giving us a warning. Remember how I was talking about this problem where if you have a bill and you've used the accrual system and you don't use the proper methodology and you go to the cash basis, it'll cause a problem. And it's warning us right now, you really don't want to write the check through this system. So we're going to cancel this out and come over and do this through, this was the California Gas and Electric system, and we'll cancel this out. Yeah, and so basically now we want to pay the bill over here in this system. And so we go down here to California, and there's the bill, and that's the correct place to pay this bill. So we're just going to pay this one bill. We're going to select the bill. And so basically, here's the payment summary schedule over here. And now we're ready to print the checks, aren't we? We're just going to pay this one bill today. And as we come over here, we first of all need to tell it what check number we're going to be using. In other words, we don't want to get out of sequence because you're going to be feeding this manual check through your printer, and you want to have it set up so that the right check number is appearing on this check. So we've done that, and so basically you can see all the checks that need to be written at this point. We are only going to print out one check today, so we're going to select none just to get rid of the earlier checks, and now we'll print out the California Gas and Electric check. So now we're ready to print out just that one check, all right? And now it says, hey, what kind of checks do you have? What kind of checks are you going to be feeding through your printer? You could have a voucher where you have the check here and then the detail of what's involved with that payment, or we can use the standard check, and then you pick your printer and then you can print it, and off it goes. And once that's printed, it says, hey, are you really wanting to do that? You go, yes, I really do. Okay, so there goes the check to the printer. And then if we were to go over to our home base and take a look at the check register, and what I like about this is this check register is just the same as the check register that you have in your own personal bank account. It kind of takes you back in time, doesn't it? And there is the California Gas and Electric payment. You can see that it's check number 1131. So that's a good thing. And so that's how you can print and write a check. And the same thing with deposits. So basically, here I had sent out an invoice and I had received a payment. Now, who did I get this from? Well, it was let's just pick Carol Corcoran. And she doesn't look like she owes us any money, so she's happy about that. Let's pick a customer who owes us some money. There is Edward Blackwell. He owes us $1,125, and he's actually sent us a check. It came in today's mail. So we'll check that, okay? And now we're ready to say, okay, we're going to save and close. And remember, he's making a payment. This is going to update his accounts receivable. We can look at that in just a second for Mr. Blackwell. And now we have record the deposit. And so basically, here's a list of the checks that we've got. And we're going to say, okay, we would like to record this deposit. And we go, okay. And now we're going to save and close. So again, we could go over to the check register and we could open up the check register, and there is the deposit for Mr. Blackwell. And also, we can now go to the report if we want to, take a look at the receivables by customer, and here's the detailed balance. And let's go down and see Mr. Blackwell, and there indeed is the payment that we just recorded, and happily he's now paid in full. So that gives you an idea about how to print the checks and also how to, when you get a deposit. Now, these are folks on the receivable system. It could be that I did not send out a receivable. In that case, I would make a deposit directly there if I was on a cash basis, or if I was writing a check, I would write a check right from here. Let's just do that just to clarify that a little bit. So let's pick another client here. Let's say it's Chris Markley, and I owe him $50. And what did he do for me? Well, I go over here and I say, oh, okay, what did he do for me? He did a delivery fee. Now, you'll notice over here that you have a section called class. Remember how I was saying that you could have 3 different locations, A, B, and C, and you could get a profit and loss by each location? In this example, this is by type of work. They've allocated it by type of work, design, landscaping, or maintenance. So they're actually breaking out their profit and loss by different categories or the type of work that they're doing. So if you wanted to continue this up and get that kind of a detailed report, you would go ahead and allocate that to maintenance in our example, and then we would save and close that. That's really the issues that you want to take a look at as far as entering the checks and the deposits. I mentioned earlier about the journal entries, and one of the things that occasionally you will need to do is make a journal entry. And you say, well, how is that, Art? Basically, I've been entering the checks, I've been entering the deposits. An example of a journal entry that you might make would be for depreciation. That would be one of them. Or maybe when this company first started, you actually put some money into the company. You actually lent some money to this company to get it started. Maybe you had to pay some license fee with the State Corporation Commission. That's an automobile license. Let's try another one. And let's see if we've got a license, taxes and license here. I don't see it. There's the taxes for federal government. But remember, we can always go up here and add a new account, can't we? So basically, I'll come over here and add a new account. It's going to be an expense account, isn't it? And I'm going to continue. And what I'm going to tell it is, this is my taxes and license expense, okay? And it's under the right category up here. And I'm going to go ahead and assign it because I might as well assign it to a tax category. Now you'll notice we have a little bit different configuration that we looked before. Before I told the computer that we were no longer a sole proprietorship, that we were now a corporation. You can see that it's got a little bit different configuration about where we are. And so basically I'm going to put it under other deductions for right now, and I'm going to save and close that. All right, and so maybe you had to pay to get your corporation started $150. So you say, okay, well, this came out of my pocket and the corporation actually owes me this money. So I really need an account that says due to shareholder. But I'm looking down through here. I could put it through owner's contribution. We could do that. So it's similar. So there we have it. There I've had to post, and you can put a memo. Payment to the state of XYZ. Oops. To form business, to form corporation. And then we will save and close that. So it's the type of entry that's not frequent. It does occur on occasion. Depreciation would be an example. Items that you had to accrue corporate taxes would be another example of that, where you would want to make an adjusting journal entry. If you take a look at the vendor's report here, I think this is a helpful section, mainly because I want to show to you that basically at the end of the year, you'll need to send out 1099s to your various vendors. And here, the QuickBooks software allows you to and helps you go ahead and send those out. So if you'll go ahead and go through the wizard, the 1099 wizard, it'll help you get started in processing your 1099s. And it shows, who needs a 1099, who doesn't need a 1099, and then you can continue right through here and process those 1099s. Or you can omit them. Maybe they only made under $600, or the type of expense doesn't warrant that. So I'll just close this, but I wanted to mention this. That's something that's nice for you to have, and that way you can get your 1099s done quickly. The next area I'd like to talk to you about is something we talked about, looking at your reports monthly for receivables and payables, but also we need to look at reconciling your bank account, and that's under banking. And what we want to do here is we want to look at reconcile. Okay, and when we pull that worksheet up, you're going to see, oh, look at this. This is the beginning balance, and I'm going to get my bank statement out. Now, before we do this, I want to show you one other issue and we'll just close this for a second and take a look at reports. And under reports, here is banking, so that I can look at prior reconciliations. Well, when I look at prior reconciliations under checking for the checking account, I don't see any reconciliations, do I? That makes me very nervous as an accountant, because basically what's happening is whoever's doing the bookkeeping at Larry's Landscaping is entering the data, and they're just entering the data month after month after month, and they're never tying it into what the actual bank is saying. So basically you have a set of books that are just kind of going off on their own, in their own universe, and they're never being reconciled. So one of the first things I always look at when I open up a set of QuickBooks is, are the bank accounts being reconciled monthly? Very important. So let's go back to the banking, and we're going to reconcile this account. So in this example, we're in the year 2020, which sounds pretty good to me. I hope I'll make it there, and I hope you do too. And so basically, I will actually get out my bank statement, whether it's from Wells Fargo or from Bank of America, and I'll get the ending balance. And in our case, I'll just use an example. Let's say I have $105,536.57. That's what it says is my ending balance. And I go, okay, I'm going to continue. Well, you'll notice that I've marked all the checks as a highlighted mark, all the checks as having cleared, and you'll notice that we've got quite a bit of activity. We've got an entire year as it starts back in January. Here I am in November. Here's the period up here. And you can see right off the bat that this has not been reconciled for an entire year. But I've marked them all the checks as having cleared the bank, and all the deposits over here as having cleared the deposits. Now, that's probably not the case. You can see there's a delta here, and my objective is to get this down to 0. So it's very possible that maybe some of the checks haven't cleared. Maybe this check hasn't cleared. Maybe this one has. Maybe that one's cleared. So I need to go ahead and be able to open these accounts up so that I can reconcile that. Let's take a look and see if this one, you can see is that one didn't clear, and maybe this one didn't clear. And there's some other check that's out of balance, and I need to go back and find that. But the problem is that if I wait an entire year, it's just really difficult. So this is why every month you want to reconcile. And we've gotten close here, but I'd have to spend, or you would have to spend a little bit more time to figure out where the difference is, and then we would reconcile. Sometimes you're going to get a situation like this where you go, holy cow, I can't find it. There's a whole months or years worth of activity. And what you can do is make an adjusting journal entry to journalize out that entry, that difference, and then you'll be able to reconcile now. We'll go ahead and leave this right now, and I want to mention to you that there is the help button, and this is always a great thing because it has have a question, and there's actually an opportunity for you to go out into the community, and most likely the question that you have has been answered. One of the really wonderful, powerful things about the software is that it allows you to download banking information. This can be so important because it's really such a time saver to download information automatically, either from your bank account or from your credit card. How do you do this? Well, you go to banking, and you'll see here a phrase, bank feeds. First of all, you'll need to set up your bank feed with your bank account, and you can see who is a participating financial institution. And then once that's done, you will import the Web Connect file, and that's basically the file that's downloaded. And then from there, you'll go to your bank feed center, which is where we are right now. And here we'll hit the blue button, and that's the transaction list. And basically, you can see now that these are the activities, the accounts that have been downloaded directly from your bank or your credit card right into the QuickBooks. Now you'll see that there are three different colors. The blue color is where the bank and QuickBooks have already recognized. In other words, the blue items have already been entered into your QuickBooks, and either, for example, by the check number, when the bank came down, it says, oh, here's check number 1112. It's already in QuickBooks, so there's an automatic match. And you'll see that we have the batch action match down here at the bottom, and we can go ahead, and before I do that, I'm going to unmatch this or unclick this one button. We'll talk about that separately. We've got blue, orange, and or orange and red, and I'll unclick those, but we're going to take care of the blues first. So basically, in the batch action, we'll add or approve those, and these have already been matched to activity or entries in your QuickBooks. So the bank and QuickBooks are on the same page. So they're cleared off. So now we have two categories left. One is where there's already an existing rule. And what does this thing rule mean? It means that sometimes in the bank statement, you will have a description that is very complicated. Maybe it's got numbers or letters before or after the word. Say it's Denver drywall. But instead of just being Denver drywall, maybe it's got numbers, 1285 Denver drywall. And then maybe down below the page, there was another Denver drywall, but in front of it, it's A, B, C, D, E, F, G. Well, it's very hard for the computer to see that they're really just the same vendor, and that's Denver drywall. Here's an example where a rule has already been set up to take some of that confusion out of the situation. Here, there was a description ATM withdrawal, and a rule was set up that anytime you see that, the payee is ATM withdrawal, maybe it was to a bank, something like that, and then it also says what account it belongs to. Okay, so the rule's already been set up, and once the computer sees that key phrase, it says, oh, okay, I know exactly where this item goes, where it belongs. So we can click that now, and again, add and approve it, and it says, okay, we have already gone ahead and allocated that to its separate correct account. Now, we've got one here, and you can see it says it needs your review, doesn't it? 9 have been accepted and processed through. This one needs your review. And up above here, this little box is called the rule, okay? And we're going to go ahead and go down here to the bottom, see manage the rule, and we're going to add a new rule. So what are we going to call this rule? Well, this was a bank service charge, wasn't it? Bank service charge. And that's the name of the rule. And anytime that a bank service charge, maybe it had 5 letters or 5 numbers in front of it, but whatever that description on the bank statement has the words bank service, okay, then we know, first of all, two things. One, that's a Wells Fargo charge. That's our bank in our example. It could be any bank, Bank of America, whatever you'd like to choose. And actually, we don't even have this vendor set up yet, so we're going to add it, okay, as a vendor. And we go, okay. And then over here, I'm just going to go ahead and bring the screen over, and we're going to put in Wells Fargo. Okay, and then we're going to go, okay. So now we know the description of the payee, and then we have to click this little plus button to say, hey, what account does this belong to? Okay, so let's go find out what account does this belong to. We're going to look for bank service charge. And I'm not seeing bank service charge, am I? So basically what I'm going to do is I'm going to go ahead and set up a new account, aren't I? And so I'm going to bring this over to add a new account. And we did that earlier, remember? We picked the type of account, the correct type of account. The account name is bank service charge. Okay. It could be any, I could call it administrative, just to give you an example. Administrative expense. Okay. And of course, we did talk about mapping earlier too, didn't we? So this would be the opportunity for me to correctly map what account it belongs to, and it could be other costs of goods sold, something like that. It could be advertising, any account. I'll just put it under other expenses. There we go. And I'm going to save and close that. So now, every time a line description comes through on the bank account that has those magic words, bank service, then it knows that the payee is Wells Fargo, and it's going to go to the administrative expense. And I'll save that. This ability to download your banking information and also your credit card information, and really people are using their credit card information, and it's very, very helpful to have all of those accounts assigned rather than just dropping it all into Office or materials. Now you can actually set it up so it's going to the right accounts. And the same thing with the banking. Remember, so many of the bank statements, the line items are not checks anymore. They're automatic withdrawals, automatic debits. So having this ability to set a rule and have things flow down automatically is just delightful. So we've done that. And then so our final step here now is to say, hey, we've set up our rule, haven't we? And so now finally we're ready to go ahead and add and approve and go yes. And there we've gotten downloaded all of our banking information and got it to its correct location. So a very powerful technique. I want to thank you for listening today. I hope this has been helpful. Good luck with your accounting with QuickBooks, and please keep us in mind. Take care. Bye-bye.